President Trump just tweeting on these markets, writing this: the news from the financial markets is even better than anticipated. For all of you that have made a fortune in the markets or seen your 401ks rise beyond your wildest expectations, more good news is coming. That's a big promise coming from the president. Joining us now, Morgan Creek Capital Management CEO, Chief Investment Officer, Mark Yusko. Mark, great to see you as always. Do you expect, looking at just stocks, that this bull run that we've had will continue?
Look, I think, anytime there's positive news, Dagan, that markets will react, particularly in these late stages of the summer, when everybody's away on vacation. I think post-Labor Day, it's going to be interesting to see when people come back from vacation, if they look at valuations and get a little nervous. But as long as they keep bringing us good news on trade, things, I think, will be stable.
So you'd put new money to work in stocks right now?
No, I wouldn't do that at all. We think stocks are very overvalued. We've been lightening up and trying to get hedged and focusing on different areas. But, yeah, I probably wouldn't put new money. But I wouldn't be so nervous that we're going to have any imminent collapse or anything like that.
And what if we saw...
Mark, this is Robert Wolf, by the way.
Yeah, sorry, Mark. Oh, I'm looking at the wrong one. Yep. How are you? Good to see you. I'm kind of with you. I'm a little cautious and a little more defensive as well. How do you see the environment going into rising rate environment? Big discussions coming up on fiscal discipline. We have the budget coming up, which obviously will be very interesting going into, the November elections. And so are those causes for concern as you come into the fall?
No, Robert, you've hit all the list of things that people should be thinking about and be concerned about. Interest rates have certainly risen, and when you discount future streams of cash flows, which is what stocks are, at a higher discount rate, the value should go down, not up. And yet the PE ratios keep rising. And that's because I think this passive wave of money, passive investing is dumb. And I don't mean unintelligent. I mean, it's rule-based. And rule-based strategies, they can't think. They can't say, oh, that valuation seems high to me. They just have to buy what's on the list. So you bring up another point about deficit spending. Deficit spending is basically a wealth tax on the middle class. And that's why income inequality is the highest it has ever been, because we have been deficit spending like crazy for the last 2 decades. In fact, that's why we're so focused on blockchain technology, Bitcoin, crypto. Those things solve the income inequality problems that we're all facing.
Mark, James Freeman here at the Wall Street Journal. Okay, you've talked about the downside and high valuations. Is this related in part to your expectations on the economy? Are you thinking that this second quarter number does not get repeated and things really slow down? Or do you think the economy is going to be great, but stocks are just priced too high?
No, James, you guys, this is fun this morning. You guys are bringing up all the best points. Look, the economy hasn't grown above 2% for 6 years. We had 1 quarter that was juiced by the Tax Reform Act, as I call it, and it's not going to be repeated in the third and fourth quarter. It's just not. GDP, nominal GDP, is really simple. It's productivity plus working age population growth. We know working age population growth over the next 10 years is going to be sub 1%. We know productivity is going to be sub 1%. It turns out 65 to 85-year-old people are not as productive as 45 to 65-year-old people. Who would have thunk it? So it's unlikely that we're going to have a boom.
Yeah, exactly. Mark, I want to get to...
It doesn't mean they're not good people, but
Mark,
it just means that productivity is...
No, I quickly want to get to this. You've joined forces with Bitwise, launching an institutional fund for cryptocurrency. Tell us about it, and would you eventually launch something for retail?
Yeah, it's great. Thank you, Dagan. So, look, we started getting involved in the picks and shovels and the venture capital around providing the infrastructure for blockchain technology, cryptocurrency. And we had institutional investors come to us and say, boy, we'd really like to get some exposure to crypto to kind of get off zero, which is the allocation most people have. So we went out and searched for a world-class partner. We found the Bitwise team out in California, and we've come together to form this new digital asset index fund that we think can solve the problem for institutions that want to get exposure. We've been around doing institutional investing for decades, and we think their technology and their expertise in handling and managing the actual crypto is a great combination. In terms of a solution for retail, we clearly would like to move in that direction as well. We're going to work closely with regulators to try to see if we can get that accredited investor standard to not apply only to this sector of the market like other alternative investments.
Mark
so
Yusko.
Hopefully we'll get there too.
Thank you so much, Mark. Great to see you, dear. Mark Yusko.
Thanks, Dagan.
Joining us.